14,197.
The question for markets remain: what is going to take this treasury loss to extend? What could push it further? We do have some news today. We have Walmart reporting any more upside on the U.S. consumer that could drive optimism on U.S. growth, could see these yields extend higher. We also get some data today. We have those U.S. jobless claims. Keep an eye on that. A lower than expected jobless claim print again could push this optimism about U.S. growth and see this 10-year yield perhaps make it that cycle high. Remember, it's
4
433
minutes still
was the
open.
10-year yield cycle high, the intraday high back in October. My eye is going to be squarely on how the back end trades. But this is a pretty decent move if you take into account, Lizzie, that these yields already moved so much yesterday. I know we're in summer markets, it's August, it's light liquidity, but these are still eye-catching moves to see before the London traders sit down at their desks.
All right, thanks to Valerie Titel for that update on treasuries. I just want to check in on China markets. You have got the CSI 300 down 0.4%, Hang Seng now down 1%. It really is on track to enter a bear market. Investors, of course, weighing Tencent's disappointing revenues, but also all of this dour macro news out of China as well. You've got the offshore yuan currently pretty flat against the greenback. The gloom injecting Asia markets more broadly as well. The MSCI Asia Pacific Index down 0.8%. It has been at levels we haven't seen since March, on track for its biggest two-day drop since October. If we also just have a quick think about UK data, we've had a raft of it this week. Inflation data yesterday, jobs data on Tuesday. The reaction's been divided, but the good news really is wage growth finally outstripping inflation, even if it means that the Bank of England may need to keep on hiking. I'm sure they're going to be talking about all that and more next on Markets Today. Stay tuned. This is Bloomberg.
Or good afternoon. I don't even know what time we're.
Good morning.
Well, I was in a short and I'm looking at it and I'm gonna get taken out.
Ah, that was nice short. I going long because for me it's very cheap here.
Yeah, but I didn't get out. I got in at 37. 3 micros.
Still, the short
I don't
for
know.
me, I don't have a
Mm-hmm.
huge plans for the long. As you can see, I just wanna go a little bit higher, and probably I will be looking to short.
Mm-hmm.
Uh, we will
Those
see.
TPs, does that mean you should get out or does that mean you should
No,
flip
this is
your
TP
position?
from Algo. It's telling you, you see, it's printing them here, it's printing them there. So it means that possibly it's a ending trend, but it's only possibly. And now
Mm-hmm.
we are 1 minute to the open, and I can see that bulls that are exhausted. We will be testing 200 and a trading stop. So I'm not sure how this will finish for my long.
You're in a long right now?
Yes,
Where did you get in?
917.
917. Well, I guess I'll stay in my short because I don't even know.
I'm in long as well on golden oil because yesterday the whole market was crashed. So maybe Europe want to take a bit of the money,
Mm-hmm.
and later on we'll see. So far, all of my positions are green, oil, gold, and Q, but we will see how long that will stay. My first TP is at 39.
Okay.
Which is a bit higher than I expected because I had three contracts, but the first contract had a 5 stop point loss and was taken when the price goes down.
Mm-hmm.
The first TP was now at 927. I don't have it anymore. Previous day close at 42, so I'm hoping that we'll go and test it.
Maybe I should take some profits here. It looks like it's gonna go.
New for our candle, we are on a 50% of it, and this is 200 moving average. So really, to be bullish, we need to go and break the trailing stop. No
At
move.
32.
At trading stop is at 37. No move at
Every,
all.
everything's green again.
But it's not moving. It's open off the market and there is no move at all. And 5 minute WMA and 1 minute is here. 15 high. Okay. As you can see, 200 moving average and 50% of previous 4 hour candle didn't accept us yet. But that's the open, so we can move a bit. I'm only hoping that we will go a little bit higher because we've got so many divergences on this drop. It
Mhm.
was look like a stop loss run.
I mean, I only have. If I get out right now, it's only $60. So
I will stay break even probably.
yeah, I'm at break even. 37.25.
I got more hope in gold and oil to go a bit higher because
Hmm.
yesterday they dropped a lot as well. And
Oh,
that's
really?
good.
Everything dropped.
Yeah, I wasn't here, so I'm not complaining because probably I'll be fighting market. What I was reading online, lots of people lost a lot of money yesterday. So lucky me. I enjoy paddleboarding on a lake.
Yeah, but we're right above the VWAP. Let's see if it holds.
View up, it's
24.
red. Yeah, it's everything here, as we can see. And the POC as well. No, POC is higher, sorry. Okay, so all of the markets, they got the POC higher, we are below it. We just test value area low and reject from it. Can we test value area high?
Are there any gaps in the 14,000s
I didn't saw anything.
that we need to close or whatever?
I didn't saw anything. I'll check it shortly. 1 second. I just wanna.
Okay.
Thursday. What we got for today? Trade balance in Europe and then nothing. Unemployment claims and Friday is clear. Okay, still
this point. So this is an interesting one to watch in terms of M&A and in terms of that sector. Now, back to the macro, back to China. According to property agents and private data providers, the country's housing slump is much worse than official data shows.
Can
But let's
dollar
bring it to a
continue the
basic
drop?
for Asia markets, Paul Johnson. Paul, many people trying to get a sense
Go
of
to the volume
what are the
profile.
issues for the Chinese property sector, and if we establish
No,
that,
I don't see any gap.
into the rest of the economy. And I suppose
Okay.
but to get an assessment of those, you need to understand how weak the property sector is in China, and that's where this story comes in.
Yeah, exactly. And so the premise of the story is basically that the way that the data is calculated and smoothed based on surveys as well as sale prices and based on a kind of average across the entire country gives you a more benevolent picture when prices are falling than might otherwise be the case. And maybe that suggests if you look at more private data that's provided on it, that the actual slump is much worse. The problem with this is it creates a lot of problems for people trying to assess the market, and that might include policymakers looking at the data and thinking actually it's not as bad as all that. It might be bad for the buyers because they might think, well, prices haven't come down all that far yet. I'm going to wait until they fall some more before I want to step in and buy. And it creates this misleading kind of impression right across the rest of the market. Now, as we know, China's really dependent on the property sector for a lot of the GDP strength. And at the moment, with those prices already falling and the underlying weakness that we're seeing is generating all of these problems, not just with the developers, but now that contagion starting to feed into some of the shadow banks as well. They're talking about liquidity problems or liquidity shortages. Basically, they've been snuffed out of the market, it seems like, and that's really dangerous and could create some further contagion right across the banking sector as well as the investment part of the.
Yes, changing red.
News from China is just relentless.
200. 200 change red. Yes, changing red. That's good.
Viewers get bored of me repeating Chinese
Changing red?
Sorry, green.
I was gonna say because it's going up. How is it going
Yeah,
red?
I'm still drinking my coffee.
Okay.
What's the shares? Is it single second derivative?
Yeah, well, I think the one thing that people are worried about is that we'll suddenly get a silver bullet measure that pulls us back the other way as well. I think a lot of the outperformance over the last month is because of the rally that we had after the Politburo meeting.
Dollar is dropping.
But we've basically given all that back again. We had some comments again overnight.
Yeah, dollar is fighting to really move
but no real substance to it, and that's the problem.
above the 103.
Maybe there isn't
1
enough
second.
of a pronounced
I removed the
amount of
mark
selling to be
yesterday.
done in order to
I think
subdue
it was
prices,
640.
especially in the equity side, a great deal further. And yet, each day that we don't get good news or we get more bad news or more credit market issues or more concerns around those areas, then it sort of like just adds to the pressure that we're seeing on the market. And right across the breadth in the Hong Kong markets, for example, is looking particularly treacherous now. It's not unique to one sector, but a great deal of the market is under similar pressure.
And actually, today they put the boxes for him to go higher. That's not good.
Broaden our conversation. We've dealt with China a little bit there. Let's broaden the conversation.
What's not good?
No, the
I
dollar
guess
got
I'm gonna go take now.
the dollar. That's not good for the indices because dollar got the boxes much higher. So
And some people on your team have been writing about how this has global messaging, global implications about the dangers of high supply.
let's see.
What are we seeing in the
At least crash in the morning, do whatever you want in the evening.
Surely we should bring Paul back into this. As he said, he's done a great piece in this.
Sorry.
Absolutely. I think there is concern about this auction. It's great size and scope that is the longest tail since 1987 for the auction there. And it does show that there's kind of a worry that maybe the yield curve control adjustment that we saw in the last meeting might be the peak.
61% of the 61.8% of the swing down.
Some of the speculation around imminent change in further policy of the Bank of Japan had actually dampened a little bit. And certainly economists have pushed back their projections until next year. And there wasn't an expectation we'll get another rapid change. I think that's a mistake. I think it's a folly in the context that macro-wise, we're seeing U.S. yields continue to provide a lot of pressure. We're starting to see that inflation dynamic stickiness come back in. We're likely to see that with national CPI print tomorrow, Tokyo inflation next week.
Can we see the continuation of this move?
Economic data out of Japan as well.
1 minute is still red, didn't change.
On further policy change in the next couple of months in the Bank of Japan, and I think that auction today reflects that. Okay, we're seeing yields go higher. This is a global story, but very much the Treasury market in focus here. So yields continue to go higher on Treasuries this morning. Is this a read across from what some perceived as hawkish minutes from the Federal Reserve? Did anything change in your view in that regard?
I don't think the minutes changed loads. I think, it was kind of pretty consistent with the prior meeting. So I don't think there was a big shock there. I think the fact is the data continues to be strong and people are nervous going to Jackson Hole. About a month ago, there was a debate, would Jackson Hole be the moment when Powell would declare victory over inflation and kind of flag that, yeah, okay, we're kind of basically at the end of the cycle. Not getting into quibble of whether there's another rate hike or not. He would never pre-commit to being firm at the end, but signal that, I think we're confident we're on top of this. And suddenly over the last month, people are going, there's no way he's going to do that, given the data we've seen. He again is not going to commit to a bunch of extra hikes, but he is not going to declare victory. And so I think that's everyone's preparing, positioning for the Jackson Hole. Definitely will not be a dovish message, and that's what we're
27.75
Okay, so
kind
the
of thing.
market focuses on the hawkishness that we could hear there, and yields are going higher. But at the same time, San Francisco Fed putting some research in our inboxes, which talks about how excess savings for US consumers could be depleted by the third quarter. I wonder if that changes the conversation.
Look, I love this piece. There's so many different
breaking
studies
the
on
trading
excess
stop from
savings.
long
It's hard to get
time.
a concrete number. I like this one because it fits my own narrative that the
Shorts
consumer
are
runs out of savings
strong.
in the third quarter, which means we can still get the fourth quarter, late fourth quarter, start of the recession that I'm calling for, which means you should be looking for a peak in the stock market in the third quarter.
Okay, great analysis from Mark, as always. Remember, you can get plenty of insights from Mark and the rest of the Markets Live team. MLIB Go is the function to use on the Bloomberg Terminal 5, the Markets Live blog. Tom, plenty to focus on when it comes to the day ahead.
There is indeed. I want to pick up on that point around the San Francisco Fed and their views that maybe their analysis that maybe those excess savings are going to start to run dry in the third quarter, because that very much ties, of course, to the US consumer, their ability to spend. We have Walmart earnings out later in the day, of course, a really good gauge as to the health of the US consumer, given, of course, that they are the biggest grocer in that country. A bit of a mixed picture so far on the earnings front from some of these big retailers. So that will be interesting, again, in light of that expectation
Nice
that
slow
maybe some of those excess
open.
savings are starting to be drawn down and coming to an end as a buffer for the US consumer. 1:30 p.m. UK time. These two stories tied together, of course. US jobless claims. We have seen a little bit around the fringes, a little bit of softness coming through for the US jobs market, which broadly still remains relatively resilient. We'll see if that dynamic is starting to change with those jobless claims out 1:30 p.m. UK time.
36
And on the central banking
range.
front, we had the FOMC minutes, of course, yesterday. The focus on central banks switching today to the Norges Bank over in Norway. That rate decision, 9 a.m. UK time.
Okay, so in just under 2 hours' time. Coming up on Markets Today, we will speak to the South African electricity minister to discuss the country's ongoing power crisis. What role do BRIC partners play in the conversations in South Africa right now? Plus, the Fed minutes show policymakers beginning to diverge over the rate path. We'll have more on that ahead.
And up next, UK inflation remains higher than expected as the cost of travel and holidays climb. We're going to speak to Roger Lee, head of UK equity strategy at Investec, in terms of how this is playing into his views in terms of how you position in UK assets on the back of that inflation print. And, of course, if you have any questions for our guests, send them to us on IB plus TV Go. You can also get more from the Markets Today team on the front page of the Bloomberg UK website or by typing T Live Go on the terminal. This is Bloomberg.
Okay, gold rejected, which is not good. RTY, YM as well, 61%.
Where
So far, they're fighting to stay above the previous 4 hour close.
Okay. The previous, the one that just got, the one that just made.
Yes, thick yellow line is a close of the previous 4 hour candle. But dollar as well, the moon drop lower. Dollar is in a cheap area. So let's see. Value area high. Everything test value area high and reject.
When the indicator makes a brand new structure low or high, does that mean that it's gonna change? It's gonna change the way it's running. Like if it made a new structure low,
It can
that should tell me
it can always change it. It's telling you for now this is new structure low, but it can
it can
it's
keep going.
it keep going. Yes, it can keep going because you don't know what market will do. We've got a lower high there, and still we can push it this lower high. So I wanna really see got lower high everywhere, but we got higher low on
Hmm.
those ones. Okay, TP done on oil, the first one. I'm more kind about the TP on NQ.
On workforce productivity around the world, and therefore what he thinks the link is between that and inflation. Sticking with the inflation theme, UK inflation fell to 6.8% in the year to July as the cost of travel and holidays has moved, adding to the case for another Bank of England rate hike. It was the October 6 month CPI surprise to the upside because even though it fell, it actually came in higher than was expected, with inflation remaining more than triple the Bank of England's 2% target. Joining us now to talk UK and broader, Roger Lee, head of UK
Come on,
Strategy
NQ.
at Investec. Very good to have you with us, Roger. Thank you for joining us. So I suppose looking
Okay,
at
Okay.
I'm
inflation this
out
morning,
right
Roger, there's
now
increasing
on
focus on higher rates from the Bank of England, isn't it? The market already pricing the
36.75.
You
increase
had a nice
to
entry, so don't
effective rates in the
blame
UK. So with
yourself.
that in mind, is it a good time or do you need to
Look it.
wait to get involved with the FT250 and other stocks that are very much correlated with that kind of peak rates expectation?
Good morning, Helen, and thank you for having me on the show. Yes, I mean, I think it's a very, very balanced approach.
Yeah, testing the trading stop.
On any sort of historic metric is trading at a significant discount to where it has traded in the past and relative to other global indices. So from a valuation perspective, yes, the 250 looks very attractive. The earnings have been pretty robust as well over the last couple of last reporting season. That's really benefiting from that nominal growth story.
72 is my
But, and this is
second TP.
but the interest rate environment, there is going to be continued pressure on the Bank of England to raise rates.
And
I'm out.
I won't have any runner, nothing like that from that.
And then you can add to that another problem, and that is if the Bank of England continue to raise rates, what is the risks of a hard landing in the UK, a harder landing, in which case...
Because they will need to prove me that they are bullish for now.
Roger, good morning.
And so far, dollar got proved it green, and they are in a cheap
Mm-hmm.
area.
Quite positive for UK equities. But one of the things you asked is, what's the catalyst to bring stocks higher from here? And I want to play what she said, and then I'm going to ask you the same question to see whether you can find some other answers about what's going to turn this market around. So let's play that string.
So I am really
We've already seen quite a lot of interest
we're testing
from
the
PE
trading
firms
stop.
coming to bid for some of these companies, and I think that is starting to show the attraction of some of the companies that we do have in the UK that have just been priced incorrectly in the short term. You know, we saw Deca Pharmaceuticals be bid for
Come on.
not so long ago. We've had multiple other bids, and I wouldn't be surprised if we saw more.
Fill me
And I
in.
think as that momentum starts to pick up, I think will also start to attract public investors and make them realize the value that there is still to go for in the
Okay,
UK.
gold going up.
Roger, that was Georgina Cooper speaking on her show at the start of last week. I should say it was 9 days ago. And I'm just curious, kind of the same question to you. UK stocks have been in the doldrums for such a long period of time. Everyone acknowledges they're very cheap, they're undervalued here. What is the catalyst to turn them around, given the quandary that the Bank of England is in?
Well, I think, Mark, that's a great question. But, catalyst, I had a client who forbade the word catalyst being used because value.
Dollar still dropping.
As your guest was saying, we've already seen a spate
So,
of
so
M&A activity.
till
And
then,
that
we've
is
got the chance to
demonstrating
go a
that
bit higher.
what we really need is some clarity around the interest rate environment. And I think that's what we need most of all.
Okay, upper green
Because
if you
without
at
that, we
40.
really don't know how the UK economy is going to play out over the coming months. What we need is to get to a point where we probably are in the US, where the Fed is signaling that the rate tightening cycle is done or very close to be done. And sadly, we're just not there yet. So I think we really need some clarity on the macro environment so we can get some certainty about what the PE multiple will be in terms of whether there will be further derating pressure, and then we can start to explore the valuation gap that you so clearly identified. Okay, so Roger, you need that clarity, that transparency, or at least more of a guide from the BOE.
What are you building here? Shorts or longs? POC, it's not far. Just go to the POC at least.
When it comes to the FTSE 100, 5250 now about 1.5% year to date. FTSE 100 is also underperformed. Is there a play around, as we see Brent coming up, some of the energy picking up as well? Brent prices have kind of sneaked up behind us and above 80, comfortably above $80 a barrel. Is energy a play as we look at cash and dividends from the FTSE 100? Oh, right.
Okay.
And again, linking with what we were talking about
One.
So the TP down on NQ.
global bond markets at the moment. And so there are lots of things going for the oil sector at the moment. We've seen the oil sector is very strongly correlated to rising yields, rising growth, rising demand for crude, etc. So that's very logical. It's also very exposed when you get those rising yields. The market tends to pivot towards value stocks. Difficult to argue. Our ranges on value stocks, given they're on sub 6 times PE and half the multiple of the US peer group. So there is a number of reasons why the oil sector looks particularly attractive at the moment. And actually, since we've had this turn in US yields, the energy sector has been the best performing sector in the last month in the UK. So yes, very much agree with that, and that's going to provide hopefully some support.
Roger, before we started this conversation, we were talking about US rates, and you mentioning there the yield link with energy. And I wondered where you see the rate story heading in the US and what that means for your wider
Previous
global
day
outlook.
close.
We were quoting some research by the San Francisco Fed that shows that Americans have still been sitting on these sort of excess savings in the pandemic. Up to this point, continue to sit on them. They're depleting, and they might be gone by the third quarter. Does that have a big impact, do we think? We're in slightly uncharted territory coming off a period with these excess savings.
I think this recession narrative, which is linked to a weakening US consumer, has been very pervasive through markets over the last 12 months or so. I think what's the real key here, and we published some work on this a while ago, that the real risk to global equities, and here I specifically kind of US equities, is if the US doesn't go into recession. And that may sound rather paradoxical, but if the US doesn't go into recession, then those yields have scope to rise further. And if yields rise further, that will put pressure on the more highly valued parts of global equity markets, which inevitably is the S&P, and will help lowly valued parts of the market, which unfortunately or unfortunately is the UK. So this yield story is crucial.
How was your day yesterday? Because you start quite well.
Yeah, sort of.
What about the morning
I,
session? You had it quite nice.
yes, and I didn't. And what happened? I didn't do anything. I left the trade going, and then, well, I tried to get in again because I got taken out because I had my limit order, and that's what happened. I couldn't get back. And I said I wasn't going to trade, but I was at a food bank, and I didn't trade till like later in the day anyway, like later. But it didn't work for me. And then I said, okay, I'm out. I'm just not going to mess with it. and then it dropped, like dropped very good. When Adam, I didn't even know that Adam called a trade at like 1 or 2 o'clock in the afternoon.
Oh, okay,
I
that's
was
nice.
in that trade, but I said I'm just gonna take the $2, $3 I had. But I was in that trade, that same trade. So, but I didn't have patience to stay in it. But other than that, I guess okay.
Okay, we start to build the bearish divergent. As you can see, it's the surge is much smaller, the scalper as well, it's smaller than the previous move. Dollar is dropping, but we've got the green prove it, so
Mhm.
shortly we can start to drop heavily. Question, should I close it now? Nice profit. Because we are in a bearish trend.
Yeah, we are.
The broader risks of something bigger and uglier emanating from China. That is the must read. John was checking out on the terminal, Hannah, or of course on Bloomberg.
Okay, so if China sneezes, does everybody else
Unless we
have
can
notice?
get back up to
The
47
wrong day to mention this, but the point is well made because, of course, we have a lot of negative data coming out of China.
or 50, unless it's gonna change from short to bullish completely.
Seem to turn around a little bit
I don't
around
know.
Hong Kong and China through the session.
London and
Chinese stocks are actually the best
they
performing
usually do
today.
that a
It's
lot.
early in the day.
Yeah, London can trade one way, very slow, but it can go one
I
way.
actually think the point's really valid.
Okay, so we're going to test the high of the
Chinese assets
At Sydney.
Frankfurt, not Frankfurt, sorry, Sydney, and this is the 61.9 retracement, where we was rejected twice.
And it's all these second derivatives, it's all the rest of the world that might really suffer from this story, as Tom outlined just there.
Okay, so we watch the contagion within China and beyond. Coming up, cracks in the consensus as Fed minutes show policymakers beginning to diverge over the rate path ahead. We will talk about where we got some slightly dovish clues, but where we saw the hawkish messaging also coming through from the Fed. We'll get some analysis. Yields are higher. This is Bloomberg.
And we print the breakout.
Hmm.
I don't like that.
Why? You're in the long.
Yes, but they shouldn't print breakout here. Most of the breakouts are fake outs.
Hmm.
Okay, no. And the breakout is for the as well dollar to go down. KYM already is up. So they broke the Frankfurt.
Hmm.
Uh, yep. Russell as well. No, Russell, no. Yeah, no, Russell is making. White contrarian candles.
Well, I want to go short only because it's in order for a short. I know it's ranging, but
Yeah.
unless I wait for it for the high.
Oh no, I just closing it because it's a mini,
Oh, okay. No,
and
I'm not playing no more.
and I've got
I'll blow my.
$600 in profit, and I looking only for
Oh,
400 more, so it don't have a sense for me to hold it now.
hmm.
I still got the oil and gold
Did that just
open.
say breakout to the downside too right now? And it flashed breakout, another breakout.
I'm not sure. I saw the breakout on what was the name of
Yeah,
it?
but it
Dollar.
went away and it came back.
Okay, I was checking the other screen for executing trades.
Hmm.
I really stopped trading the breakouts. I try to don't be a breakout trader anymore because this was making me lots of loss.
Because it can continue going up or it'll come
No,
back down. But
no, because the breakouts usually are a fake out, so the price will
mhm,
retrace. It can retrace to my entry. And what's the point of me being 600 bucks up, giving it back, and
mhm,
then going my way? So I can re-enter.
mhm.
Okay, oil testing previous for the 4 hour previous 4 hour candle close.
Welcome back to markets today. Happy Thursday. We
And the
are
high of
discussing the cash
today.
markets into European news, coming lower by 0.6%.
Here are your top stories.
Gold
Stocks in
making
China
a
and
new
Hong Kong further
high.
declines, but contagion fears mount over China's ailing property
Can
sector.
you go
Divisions over a
higher?
decision. Most Fed officials saw significant upside risks to inflation, even as two favored keeping rates unchanged at the last meeting. Plus, the yen hits the weakest level this year, trading near a point that sparked previous interventions. In China, the yuan's decline deepens. So, Tom, a lot of focus on FX markets over in Asia, the turnaround in tech stocks, of course, very topical as well. The higher yield environment, though, on Treasury is certainly worth talking about. What does all that add up to in terms of the European Open?
Well, to your point, the sell-off in treasuries continues again today, particularly on the 10-year and the 30-year. The last time I checked, you saw 5 basis point moves higher on the 10-year, closing into that 5% level on the 2-year. And again, broadly, global bond yields at the highest level in about 15 years. And that 10-year yield, by the way, ticking up to levels we last saw in October. Again, on the back of strong data out of the US and the FOMC in those
Well,
minutes,
it looks like a
more open to
strong
further
up,
moves. Across the futures then, after
strong
losses in
long.
yesterday, pretty modest losses, but futures prices
Yes, it
broadly up
is.
7% again today.
I'm not in it anymore. I'm actually, I feel good about that.
UK down by 24 points currently on the futures for the FTSE 100. And over France, the CAC rank is also off by about 0.5%. China again part of the mix on the Bloomberg reporting as well, but the property
We are
sector,
before of the
the
London
real estate
Open, so
sector
London
is
can
weaker
continue
than
up.
maybe
I will get the
initial
chance to
data suggests.
Okay, so that's what we expect at the start of the
go
European trade
into
day.
the trade
Some
again.
weakness, perhaps to do with the higher yield story. And Mark, at 30 minutes from the start of European trade, I wonder how you're thinking about the higher yield story and the various drivers of appetite for US stocks right now. At the start of the year or into the spring of this year, I suppose, we saw a great deal of enthusiasm around artificial intelligence, a real boom in appetite
Okay,
for
I've got the
particularly
TP
US
from
tech
the
stocks. And
gold.
that has faded a little of late. We've seen that higher yield story dominate. What has that meant in terms of international investors' appetite for US stocks?
Yes, and it was a chart from Cameron Price on my team in the US yesterday that really caught my eye here, quite literally. I think it was the idea, maybe it wasn't literally because it didn't really catch my eye, but that's a poor use of literally. Anyway, it did really grab my attention because it was based on tick data. And the tick data normally is a little bit backward looking. So this is June.
Yes, it's about to
But
break
what he
the
did is he broke it down
high.
to the equity inflows. And you can see this goes back more than 30 years. This is the total equity inflows or outflows from foreign private investors into US stocks. And so this was the highest month, $105 billion worth of buying of US stocks in the month of June from foreigners. That is unprecedented. Now, it makes sense this number should get bigger and bigger over time. We've obviously pumped a lot of liquidity into the system. We've got much higher global GDP, there's much higher nominal amounts. But it is still interesting that this was by significant margin the largest ever inflow. And I thought that was interesting that it's really, we can see by the price action time, it really must have just piled in to these mega cap US stocks. This is the AI focused theme. And it kind of suggests that, in fact, at the start of the year, as you said, Anna, everyone was getting excited about AI, and maybe the US market was getting excited, but foreigners were holding back. And June, suddenly they went, no, wait, this is real. We need to get on board the AI trade. We don't yet have July data, but I'd be curious to see if there are also inflows in July. Maybe foreigners have just bought all the US mega cap tech stocks just as they're starting to peak out.
Okay, that would be unfortunate timing, wouldn't it?
Yeah, we
Let
keep
me get
stalling
your
and
thoughts then, Mark, on
stalling.
another story that we've been covering this week and has really fascinated both the investor community in Argentina itself and also the broader
Dollar
investor
going
community.
lower and
First, some
lower, but
details.
yeah,
Prime
British
Minister
pound
Johnson's
and euro
presidential
going
rate
higher,
in
so
May
we know
is
where the
pledging
money is
talks with the
going
nation's
into the
central bank, but says he'd make every effort to
currencies.
avoid a debt default. In an exclusive interview, he told Bloomberg that his plans include making the US dollar the official currency of the $640 billion economy.
I think there's a previous discussion about dollarization. Actually, strictly speaking, it's to get rid of the central bank. The dollarization is an instrumental issue at the end of the day. There are four argumentative axes. One has to do with a moral issue, which
There
is
it
that the state
goes.
is wrong.
Yep.
And seigniorage is nothing more or less than a swindle by politicians against good people.
Mark, I'm fascinated to get your thoughts on this. We've focused a lot over years on emerging market FX, and I know you often bring to our attention things that are happening in Latin American currencies. So your thoughts on Argentina really important here. I mean, he is clearly very angry at the central bank. He's trotting out a lot of the sort of typical lines that you might hear from populists around central banks, around trade deals, around China. So there's plenty here. He talks about the Argentinian central bank as being the worst garbage that exists on earth. I wonder your thoughts on this
Yeah,
topic.
euro taking most of the money from the
I did
dollar.
like the central bank comment, by the way.
I haven't gotten anything because I can't.
He sounded pretty Argentina is one of those kind of upsetting stories of emerging
Because I have a
markets.
lot.
You know, we all read 100 years ago as one of the wealthiest countries in the world, and it just seems to go from crisis to crisis. It's been permanently broken for kind of decades. Then we get hope and we kind of borrow loads of money again, and it all goes wrong again. The currency's trading
It's gonna watch
the
it
official rate,
freaking
the actual
recover everything.
black market trade much worse again.
And it
The
lost
market is
today.
doing well, but in local currency
Yeah.
terms, that's because the currency is depreciating, and so therefore
It's
the
only 10
inflation
points
rate
more,
being down.
9 points, so
I
that's
think
not
that if he came in, he's certainly gathering a lot of attention very quickly. I think that investors will actually be very excited to give Argentina a chance. The dynamic is here. People get excited by yields. Investors are greedy. That's the natural nature. And when a country offers higher yields, they're willing to give it a chance and throw it in again. We saw that when Iceland was built before. So I think even though Argentina's passed, even though it's got unusual measures, I think investors will be very excited to give them a chance. I don't know, Tom, what are your thoughts?
Okay, so on this move the birds try to build something, but the search showing that the bulls are in control. Still the bonds showing the sell, the dollar dropping hugely, but the money going to euro mostly.
So I'd just caution on that as well. Look, he comes out with some amazing lines for us. Once he's in power, if he gets into power, let's see
Crude, it looks like it's done for now. I will close it.
He clearly cares a lot about this, though, doesn't he, Tom? I mean, he's got 5 dogs, and he's named them all after some of the economists that have inspired him. So this is somebody who really cares very much about what he's doing here. Really interesting piece from John Walters. Tom, I know your morning must read was by him as well. He's getting a lot of name checks this morning, but a really interesting piece. Deja vu, me, Argentina, he says, to sort of misquote a famous musical, markets have no tears. You should dig that out from Bloomberg, but really good read.
Let's get back to the minutes now from the Fed's meeting last month, showing policymakers are seeing significant upside risks to inflation, which could require further rate hikes. However, details from the gathering in July reveal cracks in the consensus are starting to form. Let's bring in markets reports by Titel and Tommy.
Market structure would be 43. I may take a short at the 43.25, maybe.
No, exactly. The fact that
If
this
it gets
dovish
there.
contingent really does exist, I think, was one big takeaway from the minutes. That they noted a couple of Fed members favored keeping rates on hold. In Fed speak, that means at least 2. So there is a dovish camp there. Let's see if it builds before they meet again. But then a lot of attention on these comments on inflation, that most of the members saw significant upside to the inflation picture, and several believe significant disinflation has yet to become apparent in that super core metric. So some hawks out there still on not seeing enough progress on inflation yet. We thought maybe in this minute we'd get some sort of satisfactory lines from them saying that they are, pleased and gratified with the fall of inflation, but we haven't necessarily gotten that yet. The other thing that did stand out to me, not
I like
necessarily
what
new
gold is
because
doing.
Powell didn't
Come on,
comment on
gold.
it, but I think it's really shaken up the markets, is this comment on QT. It was clearly in the minutes, clearly stated that the Fed could continue QT even though it looks to cut rates. So it could continue flooding the market essentially with Treasury supply, even if it does turn the cycle later in the year. And I think that goes back to this big discussion we're now having on the supply and demand dynamic for Treasuries, that we could get a cutting cycle without this mammoth QE program. And I think that's what the market has been reacting to since the minutes were released.
Valerie, speaking of the market reaction, what part of the market reaction most caught your eye or you thought most interesting?
Yeah, great point. I want to go a little bit
See, I'm
on
happy
the
that I closed the NQ
the different
because
things to bring up
we
because
make
obviously
only
Why?
few
You were in a long.
but we make only few points more and we stuck here, so it can go anywhere now.
whatever you want to call it is that
And I will
Mm.
be sitting and stressing myself that it's not
pricing
moving
in.
and what's
It's
happening with
slowly
it.
been creeping higher and higher, and it crept higher again yesterday. That means that the market is pricing it, even if the Fed does go towards a tightening cycle, or
We
sorry,
are 20
if the
minutes
Fed
to
does
London
switch
Open
toward
and
a cutting cycle,
very
they're
well we
going to
know
cut
we
that
can drop
drastically. We've seen this long-term neutral rate in the market go
at
from
least
three,
to
three and a quarter
36.
to now 3.75, 4%. And this goes back to one thing I know we've been discussing, Mark, that now the Treasury market and the U.S. economy is really starting to wake up to the fact that long-term yields, these long duration yields, the 10-year and the 30-year, might not have a substantial rally if we do get a recession. And I think that's something that is really going to shake up, at least like for corporates, for anyone. Having to price in the fact that we could get a recession without long-term yields rallying is a big one,
But
and I think
definitely
people
it
should
was very nice
definitely
run
be
for
thinking about
Europe.
that. Okay, and is that something that the Fed would want to comment on? I mean, what's next for the Fed? We look ahead to Jackson Hole, I suppose.
Almost
Yeah, it's going to be about Jackson
entry.
Hole, which is actually next week. August has gone so fast. Next
Yeah.
Thursday and Friday, Powell will have a keynote speech there. But given what the minutes have revealed, that there is no satisfaction with the fall in inflation coming from Fed members just yet, I really don't think he is going to set up this speech in Jackson Hole as a one saying that he is, giving himself a pat on the back that their job is almost done. I think he's very much going to keep that threat of an additional hike, the threat of additional tightening on the table, because we do know that the U.S. economy is still very much on fire, and a lot of that is down to government spending, which Powell does not necessarily have control over, especially during election year. Valerie, thank you very much. We've been trying to be nice out of analysis
And
of the
nice to
Fed
see the
and
breakout.
obviously
It
we've got
wasn't a
today.
fake out.
Now, busy in earnings season may have changed the news, but over in the United States, results continue to come
Yeah.
in thick and fast from retailers like Target and Walmart in the spotlight this week. Now, Bloomberg's Simone Fox has more from New York. We continue to sift through earnings for signs from the
Seems to
U.S.
be got the
consumer.
viewership
Target was
now.
out with earnings. They cut their outlook for the year for earnings, but saw better second quarter earnings per share results
Come on,
than
good.
anticipated. Some analysts took faith in the fact that their margins did a little better than they had anticipated. Others were looking at comp store sales, though, down 5.4% in the second quarter versus an expectation of 3.75%. The money clearly in the value area. However, TJX, the parent of TJ Maxx, as well as Marshalls and Home Goods, seeing strong traffic across the board, including into the third quarter, and therefore raising its outlook for the year, hoping that consumers will go treasure hunting through its large stores looking for deals. Of course, we're looking ahead to Walmart earnings, the major retailer there,
Whoa, oil.
trading near all-time
I
highs.
closed you too early.
Evercore ISI says they could see a beat and a raise here, even as shares near all-time highs. Walmart benefiting from a consumer that increasingly is trading down, especially on staples like food and other grocery items. In New York, I'm Simone Foxman, Bloomberg News.
Okay, coming up, your stocks to watch, including defense company BAE Systems, which just announced a large aerospace acquisition in the US. Stay with us. This is
37.75. It looks like it's gonna turn bullish. Or it already did turn bullish. We're already above the high.
Yep.
So I need to wait for the WMA to come or the oh my god, the VWAP so I can go long.
Okay, TP done on gold. Only one contract left on it.
Okay. Let me put it in.
It look like that pound rejected euro as well, and dollar start to going up. So, and we are 15 minutes still open.
Let me see, 15 minutes. I 1493250.
Definitely, I'm not looking for the short now. Just wait for
For
the
a short?
retracement. No, I'm not looking for a short. I will be waiting for the retracement. We got the line change to red. So, and breakout change to fake out.
What? Okay, let me go back. Let's see.
Heading into the open, Sam Hunter stands by from the Markets Today blog with the key themes to walk through. The Fed, of course, we're still
All
waiting
of
for
the
the
lines
stimulus
changed to
response
red.
data out of the US again, pointing to the relative resiliency of that economy. But this is an FOMC that is pretty split on the next steps.
Yeah, and I think maybe slightly
And
more
we got the
split than
proof
was
it.
originally thought. You know, I think that everyone was expecting to see some nuance in these, and I think we are in this stage now where everything, minutes, speeches, everything is being poured over any signs of weakening. I think it does feel like the market is taking this slightly more hawkish than I think they were originally coming into it. So yeah, it's interesting to see how that develops.
Yeah, and so there's a slight hawkish possibility of a slight hawkish interpretation to those minutes, though, isn't there, Sam? And that has sort of reaffirmed
View up
the
change
trend
green,
we've seen already
below
in the
36,
market
36
higher,
change red.
15-year high
So
global
I
yield
will be
treasury
looking to
performance.
go
And
long
of course,
if
this has
we
great
will be
implications.
stalling
It
here
does.
on
And actually, we
200
focus
moving
quite a bit.
average.
Every major central bank is constantly emphasizing their data dependence, right? And the markets are taking it at face value. So they are also looking at every piece of data that comes out and trying to decide where things are going to move. And so far, the data has, for the most part, been very resilient. Saw a little bit in the UK yesterday.
Our 200 moving average is at 35, right? That's what I see, 35?
31. 1 minute is at 34, 5 minutes is at 32. And view up is at 26. So I will see when a price come back to this area. If we got the signs for the rejection, we got proving the gains on dollar.
And I think if you're looking for one outlier, as it has been now for quite a long time, the Bank of Japan is it, right? And so if you are looking for that yield play, with yields already at a very, very high level, if you're looking for that to go even further, then it looks like Japanese bonds are the way to go.
Sam, what is your sense of to what extent the higher yields picture is going to prove a further drag on tech that, of course, has done so well and lifted the broad index year to date? Is that also a factor that's now really going to start to nibble at the edges of big tech?
I think it's definitely a factor. You know, certainly as we go into the second half.
They've been relatively immune to that higher yield environment year to date, but that may start to change.
Not in August, though. Yeah, not in August. And I think it now depends, you know, as we got this story out today, global yield sitting at a really significant high. Is there further to go on that? You know, that's the question. And that's why people are poring over these central bank minutes so closely and looking for any kind of
Actually, let's look for a nice continuation of the long. We cannot break the 44.
You can find more coverage from the Markets Today team, though, on their blog. Go to the Bloomberg UK website. Click through to the blog from there. Or you
We're
can
at the
find
top
the
of
Bloomberg
Sydney's box.
terminal. That will also take you to the blog
Yeah.
page. Now, let's get a look at stocks that we're watching this morning. Joe Meeson from our equities team joins us. A few interesting stories to cover this morning, then, Joe.
Wait
Arsenal
patiently.
Metal first off.
Morning, Anna. So
9 more
ArcelorMittal,
minutes.
the Dutch steel giant, is considering a bid for US
Contrarian
steel,
candles
according to a
click
report
off,
from
so
Reuters
we're
yesterday,
printing
which
only
cites
bullish.
investment bankers and their other sources. Now, this follows bids for US steel from US firms Cleveland Cliffs and also Esmart over the past few days, and that's sent that stock up around 40% in US trade, giving it a market cap of around $7 billion. Now, this is a pretty iconic company in the US. It was the first ever billion-dollar company and has that iconic ticker X as well. But if we look at what happened to the ArcelorMittal US listed stock in the US trading late yesterday after market, after the European shares had closed, we did see it dropping. Investors didn't like that one in terms of the reaction. It would be a big payout. Arsenal did actually exit the US just a few years ago, so it will be them going back into that market, causing a lot of uncertainty. And that one is called a little bit lower this morning.
Joe, yeah, one of our producers is pointing out that Elon Musk might be a little bit miffed that X, the ticker, has been taken already by US Steel. There's another deal in the offing in the defence space, BAE. What are the details, Joe?
So they're confirming a Bloomberg scoop saying that they are buying the aerospace sensor unit of Ball Corp. This is a packaging firm over in the US which also does aerospace components. Now this firm has around
So where would you take a
2
long if you were going to
is
take a long
expected
here?
to grow at an annual rate of 10%.
There was a nice entry, as I was saying, on a divider at 44, 46. You see, we test the divider and we staying above it, but we are too close to open, so I still will be waiting for the price to come back here.
To come back where?
1 second, sorry, I can sleep well. 28 area, 36 to 28, something like that. If you won't come back, then I will need to wait to see what's happened, because the expensive box is quite nice and far away at 1500.
We'll have to see whether investors like that deal at the moment, but there is a bit more M&A in the market at the moment.
Joe, I've already had a regular viewer, email about Adyen showing that it's expected to open 11% down on TradeGate
Yeah.
for Euronext close. I know they had earnings earlier. What's your take? It's expected to be a big source of pain today.
It sure is, Mark. So we're seeing some sharp calls, as you say. That 11% drop is a big one. So Adyen, they are missing on some of their profit margins. They're continuing their hiring, and this is pushing up their costs. Their margins at around 43%, well below the 49% expected by analysts. But interesting for me
9:58.
is that the revenue is also
The line
weaker as well.
turned
We did
green.
see some analysts warning of a slowdown in some Barclaycard data, showing that consumers were potentially starting to cut back on some of their spending. Adyen does sales in stores, so when you tap your card on a reader, it's often an Adyen reader. We are seeing some weakness in that. That stock fell a lot last year, given the rising rates hitting the tech space, and as such, there are still 19 analysts recommending buying, only 4 at sell. This is really a valuation call.
And where would you do short, or you wouldn't do short at all?
No, not now.
Okay, thanks very much to our equities reporter, Joe Meeson, for a look at some of those individual names. A few minutes to go then, Mark, until the start of equity trading.
Okay, we got the buy signal on scalper.
Where we're on the Asia session. MSCI Asia Pacific down by 0.4%.
Pretty much for me, this area it's done, and I'm happy I took a profits.
Mm-hmm.
If I don't need to re-enter, because I don't need to re-enter now, I will leave it as it is.
This morning, everything was down across
You would what?
I will yes, I will wait just to leave this area, because yesterday
stock markets are firmly higher. This big turnaround in sentiment in China from extreme negativity to slight positivity, I don't want to make it to over glamorize it.
as you can see,
Just bounced massively during the show as well. And there's a
this was where we was closing yesterday, and there was quite aggressive move. So
It's very interesting, particularly in regards to your ongoing
To go short,
that
probably I will be
relatively, on a
looking
relative
from
basis, Chinese assets are holding up quite well over the last
140
20 days. That was 10 cents
or
just was a strong
15020.
and to your point on the turnaround, that stock is now up 1.5%. So your check process was, of course, as a big shareholder in Tencent at the open. Mark, as ever, thank you for spending the past hour with us, walking us through, giving us the detail, the context in terms of these market movements.
Actually,
The open is next. This is Bloomberg.
14980. It's the first time when I will be looking to short.
14 what?
14980.
14,990.
That was a nice divergence. Oversold here, move lower and stay above the line. Two minutes to open. Again, with the contrarian candles.
922.
Yeah,
920.
it's box as well from the DC.
A few minutes to go until the start of cash equity trading. Welcome back to Markets Today. I'm Anna Edwards in London with Tom McKenzie.
And here are your top stories. Stocks in China and Hong Kong pair declines, but contagion fears mount over China's ailing property sector. Divisions over a decision. Most Fed officials saw significant upside risks to inflation, even as Su favoured keeping rates unchanged at the last meeting. Plus, the yen hits the weakest level this year, trading near a point that sparked previous interventions. In China, the yuan's decline deepens. So, we are weighing up, of course, those FOMC minutes. The Fed officials certainly keeping the door open to further hikes, even, Anna, as markets are yet to price in another 25
Okay, London open.
Yes, and a couple of voices might not have gone the way that we saw in the month of July, but still there was that sort of broader hawkish interpretation. What does all that add up to? And the Asia session, what does that add up to in terms of the European read across? Well, this is what we have on the Hang Seng right now, actually recovering from earlier losses. So we we've actually got it up by 0.4%. We saw a recovery in tech stocks. As Mark was pointing out, at the end of the last hour, we've seen a recovery in some of the other risk assets as well. Still negative on Aussie dollar, but it is recovering from earlier lows. S&P futures also recovering a little bit, up by 1.2% this hour. Let's go to the Treasury story, because higher yields has certainly been a big theme, hasn't it, Tom, of late? And that has weighed on risk assets. We saw strong data out of the US once again over recent days, and so we watched those US yields go higher, and that continues to be the case this morning. Keeping an eye on the Japanese bond market as well, we saw a really bad auction there. The longest tail, we're told by colleagues, since 1987 on in terms of demand at that auction. Does that have global messaging for us then?
Yeah, global yields at a 15-year high. Futures, DAX futures running low by 0.4% here in the UK. You're looking at a loss of 21 points. In France, DAX futures, CAC futures down 0.5% now.
Okay, so expecting a bit of negativity in terms of where stocks open this morning. The FTSE 100 just jumping then.
I'm not investing yet because I don't know where to go.
That's better.
I really don't. I'm so lost.
It's not being lost. Now we can go anywhere. We can go a little bit higher, take a scalp, and that's it. But for me, I wouldn't even try to go here.
Yeah, and then it's like it's exhausted, right? It's saying the bulls are exhausted,
Yeah.
but it's still going up.
Interestingly, from that higher yield story this morning, the pound pretty flat, which makes a change given data points recently had led to higher expectations of rates and pushed the pound a little higher. The euro is pretty flat as well. In the high yield story, though, we don't have the US in here, but we see the way that US high yield story is influencing European bond markets.
Bearish is 14925.
That seems to be
14925.
themes this morning. And commodities a little bit further this morning. Brent crude, WTI, both a little higher, as you were pointing out earlier. We've sort of been we've seen the oil price rise of late, haven't we? I mean, it's been in the mid 80s, now down to 83, 85 in terms of Brent, but we have seen some solidity broadly to that oil story.
And that ties into basic resources, of course, currently as a sector, just up about 0.1%. We'll look on energy as well, if that stands out for us. Currently, energy actually down 0.3%. Basic resources also, of course, more reflective of what's happening in terms of iron ore and copper prices. That, of course, linking into the China story, and you have seen a bit of a reversal in terms of the equity moves, at least today, even as the overhangs of the gloom around China continue. Technology has been a focus for us, of course, because we were talking to Sam Alsted about this, the relative resilience of tech as a sector year to date, at least up until this month, to higher yields.
Okay, we are overbought.
Is it starting to crumble on the back of those yields? That now you've seen about 100 basis points higher in terms of the 10-year yield since about April, and the expectation that maybe that sell-off has not done and is not finished in terms of longer dated treasuries. The implications, of course, for technology as a sector currently down 0.5%. Energy, as I touched on, down 0.3 now. Basic resources pointing to slightly stronger gains of 0.3%. Two major sectors in the green. Banks currently flat, interestingly, because banks were one of the leading losers as a sector yesterday, along with media, and it was retail that held on to the gains yesterday, the leading gainer. That is reversing a bit in the session today. Retail currently down 0.4%. And it takes you that slight safe haven tilt. Utilities down 0.5%. So money coming out of that safe haven sector, at least for now. Autos also low by 0.4. A bit of a look there at how things are shaking out across your sectors.
Yeah, so just opening up then, and these markets are weaker, down by 0.4% on the stock 600. Sam Alsted joins us from our Markets Today blog, and it feels a little bit Groundhog Day-ish, doesn't it? With the higher yield environment and weak China data sort of coming together to weigh on sentiment for risk assets. Is that what we're looking at this morning?
I think that's kind of been the story for this week, hasn't it? You know, I think we were actually expecting to see a much bigger move yesterday.
Okay, I will try one contract short.
Short.
But yeah, I think you're quite right that the yields continuing to go higher, and maybe there is then some optimism that that's going to continue to be seen. And as you just showed as well, across European bond markets, that's certainly the case as well.
Yeah, we're checking in on
But this could be like a very big candle up now. They want to break this area.
We think about the Chinese property market. Currently, the sell-off then on the 10-year, 471, Sam. So 6 yields.
This was my TP, original TP, which I was looking for here.
Oh, okay.
About 5 basis points. Talk to us about the linkages between the Fed, what we're seeing in the BOE, and the inflation fight here in the UK that is far from done.
Yeah, I mean, I think as we sort of mentioned earlier, it's that data dependence, right? So every central bank is telling you it is all about the data, and we are going to make our moves based on what we're seeing, right? For the BOE in particular, something we wanted to point out a lot yesterday is that there is going to be another set of data before the next meeting, right? Another set of wages, another set of inflation data, and we're seeing actually one very specific debate rise again, which we had at last BOE meeting, which is 25 or 50 basis points. At the moment, it remains 25, but over the course of the next month, I think that's going to be rumbling away in the background.
Yeah, we certainly spoke to a guest at the beginning of the week from Saxo, who was one of those saying, it could be 50, and that was their thinking at the time we saw that wage data. So, of course, a higher rates environment and constantly reassessing just how high the Bank of England goes seems to be a theme of the week. And what does that do for the property market? It's nothing good, I imagine, Sam. And we've got this really interesting story about the luxury end of the London property market, where home sellers are cutting their asking prices.
Yeah, so I think what you're seeing there is fairly predictable. I think
I close the gold.
asking prices coming off a £5 million home and not maybe quite so indicative of a wider economy, but it still tells you something. And actually, mortgage rates don't really affect that quite so much, right? But sentiment does. And if the sentiment of the property market is continuing to dip, which it really is, you're seeing that across all these housing reports underlying them, as the sentiment is getting worse and worse. That appears to be where those discounts are coming in for the pricey homes.
You can see the discomfort etched in your face, Sam, after you had to cut the price on your penthouse in Chelsea. I can see that. Sam, thank you very much indeed. Our markets today, of course, lead in terms of the blog. You can get more from Sam and the team on the front page of the Bloomberg UK website on all things UK property and everything else, of course, that is important and pertinent to these markets. And check it out on the terminal as well. Let's check in on some of the individual stocks on the move and bring back Joe Easton. And Joe, you flagged this for us, BAE, a big move on the back of the deal, Joe.
So BAE, Tom, dropping more than 2% now, ticking down to 3% on this news about them doing a takeover in the US for Ball Corp's sensor unit. That could be around $5 billion, a big payout for that firm, and it's giving up some of the gains.
So you took a short right now?
Yes.
Now this one
917.75.
0.3% on that Reuters report that they could be bidding for US steel over in the US. That is worth around $7 billion. That company's would be an even bigger.
That's only one contract.
Stocks ticking lower.
Mm-hmm.
The big decliner, the biggest one on the stock 600 is GN Store Nord. Now this is hearing aids and also other audio systems.
950, it's around the area where
more recession-proof, but it's speakers, personal speakers, that kind of thing. They're warning that sales are declining there, and that one is dropping, as I say,
the
slumping
TP
over in Copenhagen. Back over in Amsterdam,
dollar
the insurance
just
company,
wake up,
similar
so I was waiting
theme
for
yesterday. The insurance business pretty strong, but investment management is weak. Some outflows there and some declines in some of their investment earnings. So Aegon declining 4% over in Amsterdam. Then we're going to flip over and look at some US exposed stuff. Now, Nokia and Ericsson. Nokia falling a little bit, Ericsson holding up. We had Cisco Systems out from the US. They reported a strong report. That stock rose about 2%, as they said that customers aren't yet cutting back on telecommunications equipment, that kind of thing. So we did expect to see a little bit of a boost. Not seen too much there, but we got our eye on them. And then I threw in BBVA because we had that report earlier about US-Mexico relations and a dispute over cord.
so my original TP was spot on after that point.
Between the two countries,
Oh.
BBVA gets around half of their profit in Mexico, so we've got an
Oh, and 30 changed to bullish as well.
This one had a drug approval over in the US, a rare bone drug, but that one not doing much. None of those movements really doing much for me today. But that one, even BBVA,
You can go 50%, and then what we do when we come back to
my favourite part.
Frankfurt.
Now, E.ON upgraded at HSBC. That stock declined a bit last week, given they had some weakness in their earnings report. They're spending a lot on capex. The stock fell. HSBC sees a buying opportunity there. London Metric, meanwhile, a new buy over at JP Morgan. Now, this company,
for me to continue the drop, we'll need to go below 55.
Fallen 25% over the past year. JP Morgan recommending people buy. That's quite interesting to me, given the real estate outlook in the UK. And then Lanxess, the chemicals company, downgraded by Barclays. Chemicals had a bunch of profit.
And it makes sense because it's below the
40% since Barclays went buy on the stock
fee.
2 years ago. Not really their fault. It's more of a macro-driven thing. That one declining as Barclays cuts to equal weight.
Okay, so that one is moving as you would expect, Joe. Not always the case in August, is it? Joe Easton from our equities team with some of the movers this morning. Let's take a look at some of the events that could be shaping the
Okay,
trading day
VIX
ahead.
will
At 9
show
a.m. UK time, so in
shortly
around
what
50
it
minutes, we
is.
will have the latest rate decision from the Norges Bank over in Norway. The current rate is at a 15-year high at 3.75%. At 1:30 p.m. UK time, it's US initial jobless claims. And finally, we'll get a take
So,
on the US consumer once again. Walmart is due to report second quarter earnings before the bell today. And Tom, it was really interesting the way that the target backward-looking sales numbers actually detracted, in a sense, and guided market reaction to the results yesterday, rather than the sort of forward-looking guidance, which you might have thought would have that hold more sway. Apparently, with Walmart, the focus is going to be the outlook for the holiday shopping season, which is just too soon.
Are we talking Christmas?
Yes.
The holiday shopping season?
Exactly.
That is
too early. Too early.
Far too early. Walmart, obviously, they have their finger on the pulse of the US consumer. And the question is, are they able to continue to hike these prices? And to what extent are input prices coming in for them or not? And the consumer, you were flagging the fact that the San Francisco Fed has pointed out that maybe those excess savings are going to be drawn down by the end of this quarter. So what that means for some of these retailers is really important.
Yeah, that could be crucial, couldn't it? Because we've got slightly uncharted territory when it comes to the US consumer. Yes, resilient, but what happens when all those pandemic savings are depleted? Really interesting research there. Coming up on the programme, then we'll get back to the Fed conversation.
Yeah, significant risks to the upside in terms of inflation is what we got. One of the key lines from those FOMC minutes that may require more timing. We know the FOMC, though, is split increasingly. And former US Treasury Secretary Larry Summers says the run-up
10
in
points
10-year
done,
yields...
but only one contract, so.
Today we see a continued
mhm.
the Treasury curve. We discuss that next and hear from Larry. This is Bloomberg.
We've got to prove it red. But still, we
Mhm.
can see that the bears, they try to fight the bullish trend because we got the blue dots. We cannot drop below 55 so far. Just drop below the fib channel and okay, first red dot. Surge is finishing, which is not so good.
Oh, I know what happened, Colton. Because I left to go get my daughter's social security, right? So I had to go run errands, and I put myself at the take prof at the stop loss of the market structure, right? Whatever it was when I woke up in the morning,
Yeah.
and I got taken out. So if I would have stayed at break even, I would have never had to do nothing.
Yeah.
Like it just got to that 65 or whatever number I got in. But I just put it at take profit at the structure, and
Mm-hmm.
well, it touched,
Yeah.
I think at open or something. And I was like, oh my God.
Okay. Can we go any lower?
Can we touch the low of the low?
So far, we are still bullish. Everything showing that
Yeah.
we are bullish.
Yeah, everything's green. Yep.
For
The only the evidence line is red.
isn't especially aggressive for real rates, and you take 75 basis points, which is lower than history for term premiums.
you're looking at 475 on the 10-year, and it obviously could end up being higher than that. So nobody knows. But
Okay, I'm
since
2.5K up, and I think so I will be
and the era we were in,
calling the day again.
Financial crisis. That was the former U.S. Treasury Secretary speaking to Bloomberg David Weston
Better
about
don't
the
be
U.S. economy
greedy,
at current rate levels and where he thinks the 10-year yield could
or
get
I'll
to.
just
Speaking to
secure.
us now, Christian Koch, CIO of Fixed Income and FX
Yeah,
at
secure
Union
hit the
Investment Management
profits.
Germany. Christian, nice to speak to you. Once again,
Still
let's start
everything
with
is
thoughts
green.
about Treasury markets, shall we? Because we heard Larry Summers there talking about the possibility of going to 4.75% based on some fairly conservative assumptions, perhaps. 4.29 is where we trade right now. The broader picture, though, he's painting is one of a very different era. This isn't the post-GFC low interest rate environment anymore. Is that one that you're thinking about as well? A higher rate for longer environment?
Decisions.
Yes, and that is our take as
I
well.
know.
For the great transformation, we see the post-GFC era as way
For
behind us
me,
now,
it's the
and we're in a
question
different
now to
environment marked by higher
secure some
inflation,
money, close it
potentially
completely,
higher investments as well, and higher volatility. So
or
we
stay
do not
break even as I
see
am, and
a decline in 10-year Treasury yields from
it's
current
too early
levels.
to
I also
start
think that
trailing.
Summers has a point in focusing on the 10-year rate and not focusing on the overnight rate or the Fed funds future anymore, because I think the Fed is at the end of its rate hiking cycle, and the movements that we're seeing in the yield curve today are more at the long end of the curve and not so much at the front end of the curve.
Do you expect that, Christian, that dynamic, and good morning, to continue then, in terms of the movement
They
being more pronounced
teasing
at the long end?
us.
And when is the upside for 10-year yields then? Do you see 4.7?
No, we don't see 4.7 because we think there is a certain lag to the monetary policy decisions
Dollar start
implemented so far
dropping.
this year, which will likely drive
VIX is
down
going
the US
up.
economy and also leads to further decline in inflation. We've got underlying inflation
VIX is going up.
3%,
Yeah.
Good.
and we think that will continue
Can
to
it like
have very strong
skyrocket up?
No, I don't expect anything like that now. Now it's dropping little bit. So,
uh,
but dollar is dropping.
there's too much focus here
uh-huh.
and on the question whether there will be one more rate hike or not.
Which is
But a lot
not
of
good.
us focus on the question how long the Fed will keep their rates at the current level. If you look at what the yield curve is pricing today, it's pricing in a Fed funds rate of
On the wall.
4.1% at the end of 2024 and 3.5% at the end of 2025. So it is pricing in a very steep and fast decline in Fed funds rates. And we think this is maybe a little bit less likely given that we do have a very resilient U.S. economy, as you can see from the retail sales numbers and from a number of other indicators that point to a soft landing and not a recession of the U.S. economy. So Larry Summers is right in focusing on the long end. And I suppose, Christian, in support of your point there, a focus on the Fed and the demand side of the U.S. economy might make sense, but thinking about the supply side on Treasury is also possibly important, given how much issuance we're seeing. Is that also something that is going to keep these rates elevated? Well, Larry Summers made a point that he expects term premium to rise again in the U.S. Treasury market.
These things that don't want to drop from here.
Artificially low for a very long period of time,
Nope.
and to some extent that has to do with a large amount of
I will
allocated
secure
to
like
bank debt.
$50
Now, the Fed is now in the process of shrinking its
and
balance
we'll
sheet.
see.
They're concerned about the interest payment it has to make on its excess reserves on the balance sheet. And with a lower balance sheet and less demand for treasuries from the official sector, there could be some upside pressure on the long-term yield. So in that sense, I think he's right.
Christian, explain what happened with the Japanese debt auction. It was lackluster, to say the least.
Yeah, the continuation of the bullish on gold.
Over in Asia. What do you make of the
Dollar is
implications
dropping
then? I
heavily.
thought that there was going to be moves into Japanese assets on expectations that yield curve control would be adjusted and removed.
Yes. So, we were expecting some movements here from the Japanese investors who hold large amounts of currency hedge positions in the U.S. Treasury market and also in the German Bund market. And that movement has not materialized yet. And this is why we don't really see much repercussions here of the Bank of Japan decision to lift or to ease the yield curve control. You see the 10-year JGB is trading at 65 basis points, not very high, far cry from the 1% that many people were expecting. Now, why don't we see that movement? I think it has to do with the fact that prior to the adjustment to the yield curve control in Japan,
Japanese investors could already earn higher returns on their JGBs than they would earn on a currency hedge basis
We
by going into
still
much higher
very
yielding
bullish.
treasuries or bonds. So the fact that we
As
have very
we
high hedging
Yeah.
waiting
costs
here, we are
and
on the top of
big
the
move, a big reallocation
fifth
of assets
channel
out of these overseas
and
markets
trying
into
to
the
stay
The
on
what
Japanese
top
channel?
of it.
and therefore we see a slight upward drift here from the 10-year JGB futures.
Oh, and the expensive channel?
No, the fifth channel, for our fifth channel. Top of the channel is at 56 and bottom is at 20.
The PBOC, of course, trying to defend the currency, and they've been doing that increasingly aggressively and over an extended period. Do you see anything changing the dynamic when it comes to the yuan? I know fixed income and FX, your focus.
Yes. So with respect to the Chinese economy, we really fail to see the end, the light at the end of the tunnel.
Okay, look like gold going up.
That we have here, a real estate crisis that really has not been solved. Yeah, it has to do also with the fiscal crisis because.
Oh my God, everything's green.
Yeah, everything is green.
Of their budget, and if the land sales stop,
Saying we are
they will have a
bullish.
tough time holding up fiscal spending. So we're in for a long period of decline.
So then,
In China, and there is no solution in sight.
where's the bullish?
What does that mean?
37, 70, 37 maybe, go long at 37 or at the VWAP
The renminbi will continue to depreciate.
46,
or
80
the,
cents for me.
Because it is also an indicator of confidence in the overall economy, so they will try to prevent an overshoot of the renminbi here, and they will try to lean against further weakness in the renminbi against the dollar. What they will not control and what they cannot control is yield spreads and credit spreads on Chinese issues and on some of the Asian issues. So if you look, for example, at the iTraxx Asia index of CDS spreads of Asian corporates and sovereigns, there we see a rise in risk premium.
Okay,
And we think that
now
rise in
I
the
like
set
it
to
much
continue,
more because the
although
things
there may
changed
be
red
some,
for me.
some stability here coming up.
Only we testing 200.
Prevent an overshoot in the fixed. Yeah.
break
Okay,
the
7:30
chart.
currently for the onshore currency.
200
CNY versus
change
USD
red.
just down by a tenth of 8% in the morning on the back of a stronger fix again from the PBOC. Thank you for joining us, Christian.
Testing 1 minute as well.
Union Investment with some really smart insights. This
That was spot on entry, but shame it was only one contract. 71.
Is that the WMA?
33 what we're looking for. WMA 200 and previous day close. And a POC.
You know, it's been so long I haven't traded RTY, YM, ES. Are they easier? Like, we won't lose that much money with them, or?
Yeah, we won't because they are much lighter. They don't have as much. They're moving maybe sometimes not as you wish, but they don't cost you as much. And we can see we starting to be red. Okay. It's only the retracement. 50% is at 490. Sorry, 489. We got support at 44.
50% of the
Of the
NQ?
50% of the swing up, which we just made on a
Uh-huh.
Frankfurt.
Oh,
But
okay.
if you look for the boxes, we are still bullish because
I know 5.
we'll need to go below the Frankfurt like opening range. Accept the Frankfurt
Okay.
opening range as we was very bullish there.
Uh-huh. Well, that's at 38. Oh my God. Right?
Yeah.
38.
Yeah.
No. 32.
1 minute
I
and
just need to.
200 holding so far.
It's the world's biggest luxury company, valued at more than $400 billion, with some of the industry's biggest names under its
For
umbrella.
me, it's dollar. It's doing well because it's staying above the 200
Mm-hmm.
and got continuation to be bullish. So I would like to see it going up. VIX is as well.
The world was kept guessing which of his five children will take the reins, as they all assume bigger roles in LVMH. Here's who's who in the Arnold clan. There's the eldest, Delphine. She's the head of
No.
LVMH's second biggest fashion brand, Christian Dior. The second, Antoine, the most public-facing executive among the siblings,
Okay.
oversees LVMH's image and public relations. From his second marriage, Bernard Arnault had three more children. Alexandre is the head of products and communication at Tiffany. Frederic heads the watch brand Tag Heuer, and the youngest, Jean, is in charge of developing Louis Vuitton's watch catalog. One of the interesting things about the family is that they make a point of meeting once a month at the LVMH headquarters here in Paris, where they have lunches and they discuss everything from
950.
business to personal matters. The idea is to have a
Okay,
family
oil making the
unity
new
that
high.
is going to stick together to avoid attack or intrusion.
Definitely closed much too early.
And Bloomberg's Nicole C, who you saw in that report, joins us now. Nicole, give us some size and scope then on why this matters, this succession story. Yes, so thanks for having me, first of all. It's really Europe's largest company. It's the world's biggest luxury conglomerate. I just took a look today on StatGo, and so it was the 15th world's most valuable publicly traded company in terms of market cap. So
I'll
here is why
go.
we're both Lucy and Bernard Arnault. We will really shape the industry. But
Oh,
according to
that's
our
it.
reporting,
Better.
analysts say that it is somewhat
If
already
I
built into
like
share
58
price.
a day.
So really, the big question is just who will it be? Will it be one of the children? Will it even be somebody who's not part of the Arnault family? You've got five children as optionality there.
A real life succession. Love it. Love the story. Thank you very much indeed, Nicole C, on the prospects of that succession plan for
30.
LVMH. Let's
Oh, we're
check
at
in
the
on some price
WNA.
movement significantly lower on the day. This is the Dutch payments company Adyen.
Oh,
Currently
one
that
is
stock
here, five
is
is
down
below, 15
20%.
above.
Big
So
miss across the earnings picture for Adyen. The analysts are taking this very negatively, of course, as well as investors. Missing on profitability, revenue growth, and volume concerns about competition. Plenty more coming up. We'll speak to South Africa's energy, talk on the energy crisis with the electricity minister. That is next. This is Bloomberg.
okay, dollar go up.
MQ. This is the 5 is at 935. The 15 935. We just need that divider line doesn't want to turn red. Well, mine doesn't. I don't know if yours is.
No, it's still green.
So, you were gonna tell me something about. Yeah, was it today about the ranging or the chop?
Yeah, I was showing you like when you see the price. Okay, we've got continuation flashing. Uh, just the best thing to see if we're ranging or not, go to the higher time frame and check it,
Mm-hmm.
what ATR we've got. And as you saw, this was your chop area. It's quite big one,
Okay.
but because we cannot make the new lows, we cannot make the new high. Alexa, stop. we just going up, going down, going up, going down. So the best thing is here, if you can see something like that, the patterns like that, just make the square,
Hmm.
uh, make the square and trade top and bottom. This will be my
Okay.
square. And what I will be doing, I will be, when I will see price coming towards here, I will be buying it, putting the stop loss below. When that price coming here, I will be selling it. And the selling was much better. The reason why we was printing the trailing stop. So you're selling, putting
Hmm.
the stop loss above the trailing stop. Okay, it's going against you, it's going against you, then giving you profit.
Okay.
But don't look for like a huge trades at that time.
We got a continuation and it's going up.
Yeah, I know, and I
Oh
missed
my
my
goodness.
exit, but that's okay.
Oh God.
Well, you open short here?
I did. No, not here. I
Okay.
opened at 62.
52 or 62?
62. 62.
Okay. But
But that continuation was a total fake out. Unless it's gonna come back down.
continuation was flashing and then switched off, so
No, I still have it on my screen.
okay, my one disappeared and dollar got a trading stop, so I closing my short.
Continues to push. You're seeing that with gilts. We're seeing that across treasuries again after that move high and the 10-year yield, by the way, stateside, close to that October high.
200 was holding the price, 1 minute as well, and it's showing we are bullish. We knew we are bullish. This was only my, how to say that, I was gonna try if you will go any lower or not, but I should
Hmm.
close it there. That's okay.
That remains in the green. And this is interesting, given the concerns about the Chinese economy. Iron ore is really rallying today in terms of pricing, as is copper. That's lifting basic resources up 0.5%. Of course, that ties into FTSE 100 as well, a big component there. But across all your other major sectors, you are seeing losses. It is just basic resources that's gaining so far. The industrial sectors are feeling the pain of higher rates. Technology, of course, remains a focus for us as well on the back of the sell-off in terms of debt. Currently, 0.7%.
Dobry,
Dzień dobry.
otworzyć.
No, naciskam 100 razy.
A tam już jest pusto, to trzeba będzie wziąć i zdjąć to, ja tak zrobię, że ściągam górę i szczykawką wyciągam wszystko.
No. Tak. A, nie.
Okay, I will try to go
We could
long
have
on,
gone long at the 1 minute.
I will try to go long on the other account.
I
Oh
know, but
no,
I could have gone long at the 1 minute. At the 1 minute WMA.
Thank you very much, Anna. Yes, we're taking every effort to make sure that we are able to provide some degree of relief in relation to the energy deficit in the country because of its devastating impact on the South African economy. Yes, as part of this initiative, we are looking at securing emergency power and power ships gives us a unique opportunity for us to get
definitely
additional
gold
megawatts
is ready to be short.
to the grid in addition to
Is that what?
No, gold, I will be shorting the gold, I'm not touching anything
Okay.
else.
and also look at generating capacity. So in relation to the power ships, they are going through a process of environmental
I was gonna say you're
approvals
all
so
red,
that
but
they
that's something
are
else, right?
able
That's
to
the
remain
source.
within the
And you said,
parameters of the law in how we are going to approve this
Ooh, trading
emergency
stop start
source of
printing
power into
as
the
well on
confident that this project will go ahead despite environmental concerns and despite political
NQ.
disagreements about it.
Which trading stop?
Trading
I
stop.
don't have it.
You can see here it's from 1 minute time frame, not from 5.
Oh, okay.
The initial conversation was about the 20 years of contracting.
Where is yours?
That must be truncated to 5
Is it
years.
the dot?
And the second part is that
And now it's a dot because it's still opening.
for a year
Oh, okay.
for them to raise objections and for the Minister of Environmental Affairs and Fisheries to look at the objections objectively and make a determination. So we'll allow the legal process to unfold, and we are not
Ah,
about to interfere with that process, but as a ministry, we are looking to add additional megawatts onto the grid so that we are able to resuscitate the South African economy and attract much needed investments into the country.
Well, Minister, there is a deadline, I believe, for December to get this deal done with the Turkish partners around this LNG supply from these 3 ships. Can you at least give a commitment that that deal is going to be finalised by that timeline?
Oh, no, I can't make an absolute commitment. Like I said, these are environmental issues that are outside the domain of the Ministry of Electricity. As you mentioned, there are other voices that are opposed to this source of energy, and will allow them an opportunity to express their views. And like I said, the Minister of Environment is the one who will make an objective determination. If she finds that the objections are valid, they've got a basis, then the project will not proceed.
well,
If we are able to find that the mitigation measures as advanced by the
Dollar
contractors
drop.
are sufficient for us to
VIX as
so does the
well.
the
VIX.
marine environment, the ecology there, I'm sure she's going to give it the green light. So it's an objective, separate process, and we are going to respect it.
So, Minister, if it falls through, the deal, what is the backup? Because you said earlier this year that the load sharing was coming to an end. What are the contingencies you're putting in place should this LNG deal with Turkey fall through? And
We
do
are
you
green.
still see an end to load sharing this year?
Oh, yes. I mean, this is just part one of the interventions we are making. Just to put it into context, we have improved the performance of the plants. When I came into the office, they were at a historic low of 48%, the energy availability factor. Now, as I speak to you about the 12 months into this effort, we are sitting at 60% energy availability factor. There's also about the improvement in the generating capacity from 2 power stations. About 2 projects that are happening there. One power station is called Tutuka. We're going to get 1,500 megawatts the first week of September. That the project is on course. We are meeting the timelines. And then the second one is Kusile, one of the 2 newest power stations in the country. 3 units that have been removed of loads are going to give us an additional
73 was our high.
2,500 megawatts. So in the next 4 months or so, we'll get 4,700 megawatts, and that is going to lift the energy availability factor closer to 70%. And then we are working with the private sector on new generation capacity in relation to renewables, largely PV and solar. A lot of those projects are far advanced. We've got a significant number of megawatts that have reached the financial close. So the powership is part of a totality of the interventions that we are making. Is not the sole, if you like, intervention. I'm more than confident and buoyant about the prospects of doing away with load shedding, but we need to build energy security resilience going into the future, and that's why we are going to be very aggressive going into the market to appetize private sector players to come and play on the generation side of the energy ecosystem.
And Minister, can I ask you about those solar plans that you have? I know that China is
We can just get to the VWAP so I can take a long.
Is China going to fast track its supply of solar panels as an important brick to South Africa?
But you can see
Just
that
because.
everything changed. We are quite bullish now because we're printing not the blue dots but the green one.
Uh-huh.
So it's
Candles
only
are,
one step
yeah.
in.
Multinationals here in the country, the major European powers, including China to the east, and the conversations are confirming that we should be in a position to build domestic capacity for us to be able to produce some of these components that are
And
required,
gold is
solar
dropping.
PV panels, batteries, and inverters,
Nice.
and we're creating an environment for foreign investments to land into the country because we're able to guarantee supply and see-through of the pipeline of the solar and renewable energy projects in the
The hell
country
just
so we can
happened?
be able to guarantee demand. And yes, to your question, we are advanced with many players to
We
invest
got
in the
the
country so that
temporary
on the
POC
back of
here,
the
so
crisis, we
there
are
will be a
able
bit
to
of the fight.
stabilize and create a much needed jobs.
Hmm.
And specifically on China, because I know you've spent time now, I know you've been on the ground, you've met ministers and businesses on the ground in China. Do you have a firm commitment from China on solar panels? And if so, what is the time frame?
Oh, yes, that will also be concluded on the sidelines of the BRICS that is taking place early next week, I think the 21st to the 23rd in the country, preceded by the state visit by President Xi Jinping. And on the sidelines of that, myself and my peer from China will be concluding those agreements. And the timelines really are that we should be able to get significant investment into the ground in the next 6 months. I want to hasten to add that these opportunities are not only limited to Chinese companies. Like I said, I've engaged with the Germans here, I've engaged with the American ambassador, we've
I am
engaged
short on a SIM account.
with the French. So we are exploring all
That what?
kinds of
On the SIM
opportunities
account,
to
I am
ensure that
short
we
at
create
58.
investment in the South African economy on the back of the crisis so that we are able to use
58.
the crisis to further industrialize and create much needed jobs in the country as we
And the
bring
stop I've got at
build
65.
energy resilience and energy sovereignty for the South African economy and also for the SADC region because we are a principal anchor of energy supply in the region.
And
Minister,
TP, I've got
Exxon have made some trouble, of course,
1914.
and that's part of your appointment. What has been your biggest realization, your most important discovery about Exxon and
Fourteen
the way it
nine
operates
one
since
four.
taking over this business?
1914.
Well, the first one is that there's been major underinvestments in the maintenance of the plants, and that had to do largely with the compromised Eskom balance sheet. But I've been able to successfully make the case in Cabinet to say that there has to be significant fiscal injection into Eskom to make it possible for it to make the much needed investments. And on the back of that, National Treasury has given Eskom a fiscal injection of about 15 billion dollars to invest in maintenance, and that explains the kind of improvements that we are making. We are ensuring that we are stabilizing the leadership at ESCOM, advance in having a substantive appointment in relation to the group CEO. We have placed experienced managers to manage the power plant. We've got about 14 of them in the ESCOM stable, and then we're also addressing the issues of corruption that had bedeviled ESCOM over a period of time. I'm assisted by a team of law enforcement officers, intelligence operatives to make sure that we are able to crack the code there
Okay,
in
the
relation to corruption.
channel drop
And we are
to the
making
VIP,
significant
to the
advances.
VWAP line, which is
Ongoing
30.
cases, investigations over
And
100
this is the
case
61.8%
involvement
of
and over
retracement as well.
60
So
arrests that have been
what
made.
we
So we are
will do
making
at VWAP.
strides on those three areas, and that explains the kind of improvements that we're
But
seeing.
we still need to cross
Well,
the
let's take a
5 minute,
bit from
no?
there. You mentioned
Yeah,
corruption, which is
I
where
think
perhaps
so.
the
We
biggest
should
threat to
do it
all of this.
easily.
Is it not? You
The
talk about
5 minutes at
limitations on
36.
direct investment.
Yeah,
There is reports, there are
at
reports, there
42
are
we got the previous
allegations
day
around
close, so
connections between ANC officials and
we
gangs
are
on the
now
ground,
there.
siphon of
And
coal, the ripping out of copper cables, the destruction of infrastructure for criminal gain, and
very
the links
nice.
between ANC officials and some of those gangs. Those are the allegations. So those are the criticisms. You cannot attract foreign investment until you grapple with the corruption problem. And the critics would say you at the ANC are failing.
Well, that's a valid point to say that one of the
Continuation.
preconditions for to attract investment is to
This
address
is the one which
the
disappeared
problem of
from me earlier.
corruption. I have made the point that we have
This is what
managed
happened
to
earlier and
address
it
and
shot
in
up.
relation to
Yeah,
ANC
Where are
connection to
you?
some of
Okay.
these
Did I get
gangs
one? Let
that
me
has
see.
been established, and to the extent that it will be established, will be
I
very
didn't get
important
that.
audit, but we are making those arrests over a thousand cases that have been
Let me
opened
see if it's
and
working.
over 60 arrests that have been made. We continue to
Yeah.
make those strides. We are continue to undermine and liquidate the cartels that have been ravaging the infrastructure, not just of ESCOM, but also in other parts of the South African economy, the logistics sector, the construction sector. So it's a whole of government approach, and we are also assisted by private sector. They are lending their expertise through a mechanism called the Resource Mobilization Fund. We have been able to get some of the most seasoned experts. They are working with government as a joint initiative to undermine any opportunity for crime and corruption in this sector of energy and largely in the South African economy. We are making those strides, but I'm not about to suggest that we will brought it to an end. It's going to take dedication and amount
So we
of
can get to
of
904.
time, decisive action. But I think we're going to need to slow that and in ensuring that we are able to undermine this corruption, because as you make a point, I don't think that the investors will have any degree of confidence coming into a geography that is ravaged by crime and corruption. So we really want to ensure that we secure, protect the interest of the investors, but primarily is the interest of the country. And it is in our interest as government to undermine cartels that wants to derail the development project in our country.
Minister, thank you so much for your time. We appreciate it. South African Electricity Minister Hosienso Ramakopa, we thank you for your time. And stay with us on the subject of the South African economy. We will be talking to the South African
My
Reserve
original
Bank
TP
Governor.
will be
That
hit
conversation
shortly.
coming up shortly. Fundi
I need to
Sartiban
make
is joining
$900.
us at 10.
Excuse me?
Okay, coming up, Argentina's
I just need to make $900.
wonderful character.
Oh, you trade minis.
Yes, close the country's
Yeah, but I only have 5 micros.
our exclusive interview with Javier Milei. It is
That's
So
good.
I'm at 200. I still need 630 more dollars. So we can get to today's low.
Don't do that
I
way.
think.
Just try to secure some money as you're going down, because if the price will
Yeah,
go against you and you wouldn't take any profit, you'll be upset on yourself and try to revenge
I've
the
been
trade.
doing that all day. I've
So
been doing that all day. No profit. Because I've been waiting at break even.
we're
But
ranging now, so as I show you, just draw the box and play top and bottoms. Don't play the breakouts. This is what I was doing. I taking profits up to the lines which I've got. And actually, so far, both of the trades was perfect, because that one was up to the point with the top, and then my short, which I open and close too early, as well going my direction. TP it's 34, and I closed it earlier, but I wouldn't be too greedy to go much lower.
okay,
This is why
so
I'm
let's
on
see.
a demo trade, and I want to see what's happening on 1-4 area.
Okay. So box to 905 or 911. $63.75. So bearish 44.25.
49 minutes into the European trading session, you're down across the benchmark in Europe by about 0.5%. The FTSE 100 trading at 7,328 across your sectors. Basic resources holding its gains at 0.6%. Industrial goods are being squeezed, currently down 1.6% in this higher yield environment. Let's get back to politics, geopolitics, emerging markets. The front runner in Argentina's presidential race, Javier Milei, is pledging to close the nation's central bank, but says he made every effort to avoid a debt default. In an exclusive interview, he told Bloomberg that his plans include making the US
Good
dollar
morning,
the official
something.
currency of Argentina.
I think there's a previous
It's for the sound, but it's not connected yet.
For what?
Strictly
Sound.
speaking, it's to get rid of the central bank. The dollarization is an instrumental issue at the end of the day. There are four argumentative axes. One has to do with a moral issue, which is that stealing is wrong. And senior
Wait,
is
there
nothing more or less than a swindle by politicians.
don't really
and
trades or
people.
not?
Therefore, let's say if we consider that stealing is wrong, one of the greatest thieves in the history of mankind is the central bank. The second point has to do with a technical issue, because in the Argentine case, it is more evident when a product has no demand, its price is zero. So, if the local currency has no demand, then its price should be zero. The equilibrium real balances are zero. Whatever amount of money a central bank wishes to impose, the counterpart is that the price level is infinite. Demand at its price should be zero. Equilibrium real balances are zero. Whatever amount of money a central bank wants to impose, the flip side is the price level has infinity.
And what do you do with the central bank? Would you close it? At one point, you made the joke that you were going to set it on fire.
Well, what you do with the building is a problem
Come
with
on,
what you
Enrico.
decide to do with it. It's a figure, it's a metaphor. What I'm saying is that the institution doesn't exist anymore. I am saying that in the transition, until you can transform the banking system into a free banking system, it will have to fulfill the function of regulating the banks. The superintendent of financial institutions will continue to operate until a free banking system can be set up.
And in that idea, if you are president in 6 months, 10 months, 1 year, all the bills in circulation in Argentina will be dollars?
All dollars, yes.
47.
That was our exclusive interview with Argentina's presidential frontrunner. The election is coming up
47.
later this year. Javier Milei speaking.
Still dollar, as you can see, it cannot cross 103,460. But
Oh,
let's
okay.
try to go higher. Okay. I'll be back in a few minutes.
We could just pass the VWAP. Like all of it. No struggling, no nothing.
I think so. We'll be struggling here because we've got the view up, we've got the 50% of the market structure box. Okay, I'll be back shortly.
Yeah, that's fine. Go on.
African trading session. European stocks are weaker. It's part of the issue here. Higher yields and the higher yield environment continues to be a feature of markets today. Let us talk about the Fed with our colleague Valerie Tarsell, who joins us and can give us analysis. So post the minutes, it is possible to give that a sort of a hawkish interpretation, even if doubts were evident, and so yields go up. We're still in speed.
Yeah, exactly. This is not being led by the 2-year note. This is being led by the long end. This is the steepening pressure that we have seen all of August. And if you really want to laser in on maybe what could have kicked that off, perhaps it was that comment on
Okay,
QT
we're
and
not
that
moving anywhere.
could continue even though the Fed cut rates.
Mm-mm.
And that could very much change
We're
So
at the bottom of the
where
box.
yields go with
5 minutes it's
I don't know, but
holding.
we're really box.
maybe we don't get a mammoth on the
Somebody.
cards if we do have an economic
This is the opening range of Frankfurt.
Sydney? Oh, okay.
A lot of excitement
Top
over
of
in
it.
Asia, at least amongst our team, the news team around JGBs and the long tail. Explain what happened, also the implications.
I need to make this
weak 20-year auction in JGBs.
bigger.
I mean, it goes to say this pressure on global yields
Karki?
even more of an
One
issue
second.
in Japan because they're just starting to have these bonds, be freely traded, right? So they're still trying to find out where the clearing price is for these JGBs. And a big duration event like an auction is a good way to judge where that demand is. It wasn't there today, and that JGB curve continues that steepening, this long end weakness, which essentially is also reverberating back in the treasuries this morning. We're seeing the 30-year yield rise the most on the curve.
And we're still monitoring any comments, any rhetoric, any jaw boning, of course, from officials in Japan around the yen, currently at 146 days. That's how, of course, our markets seem breaking down. The treasury sell-off that we're seeing, and of course, that JGB auction. It has not been an uninteresting day across these markets. European equities currently down 6 cents.
Yeah, no, we're down together, very August feel, but yeah, big moves on markets. We're off quite a stash on European stocks, down by 6 cents and 1%. A confluence that higher yield environment concerns around China once again. We're peddling the same themes, it seems.
Yeah, the sell-off in global bonds, I think, is really pronounced. 15-year high in terms of yields. We're looking at futures flat stateside. S&P, of course, bonds slightly softer, of course, but there is
Right
still
here.
movement across these markets. Stay with us for all the action, more themes, and important conversations on Bloomberg. This is Bloomberg.
Oh my God. There goes that profit. Prove it, but it's definitely going.
I don't know what is it thing. Okay, prove it green and we look like the bull step in.
And yeah, like giant. I'm still in my short though.
Yeah, that candle.
62.50, like I said, but I
Dollar
think I'll get taken
reject.
out.
Yeah,
No,
dollar
there. Where? I
reject
don't see.
fix as well.
Oh,
But 200 is holding.
hmm?
200 moving average
It's
is
a.
holding the
But
price.
we're above 200.
No, 200 moving average is here at
Where?
54. 54. 55.
Mine shows different. Okay, let me see what I have. Let me see what I have. Is it SMA or EMA?
No, it's Adam moving average. So this is, I don't know how he
Oh,
make
okay.
them.
Okay, no problem. Because I do the 200 EMA. If I remember, that's how he showed me a long time ago.
Yeah.
How much is it? Where is that 200?
55 now.
Very good morning and welcome to the Pulse. I'm Ben Spenny in Dubai. Here's what's coming up on today's program. A cluster of economic problems in China with the alarm bells ringing in the country's property and shadow banking sectors. European stocks on low.
We're above 55.
Steel slump on
And we
consumer
changed to be
rates
bullish.
in the US. Most beneficial sources
Oh
of
my
data
goodness.
cite risks to inflation, even as two favor with keeping rates
Mm,
unchanged
VIX is
at the
dropping,
meeting. Plus, UK inflation falls
closing
after
the gap
May's
from
higher
the
than
open.
expected research in
Continuation of
September
bullish
leads
now.
UK economists
You
on
see, this
expecting
is
yet
how you know it's a
another
chop.
30
We
minutes.
had a continuation of bearish, we couldn't do anything. Continuation of bullish, and we just stuck in this area. So it's the area, just draw the square here and do not trade.
Up 25
Hmm.
basis points. We are far from done in the global rates narrative. Yes,
So
there was a rally on
actually
Monday,
my
but for the
TP
Norwegians, the
was
rates fell
hitted,
4%,
the original one, at
0.75%.
33.75,
On that, checking in
or we
on
didn't
Europe,
go
the
as
Norwegian
I
rates
was
trade
missing a
averaging
point.
2%,
No,
pretty much in
it
line
was hitted.
with where the survey
I would be
was
filling.
across the Bloomberg world. In terms of European markets this morning, this is a much more tenuous, let's say, situation. Global bond yields are at a 15-year high. That is having an impact across the entire equity spectrum. You've got the Fed talking about further tightening. You've got intervention potentially on the watch in the yen. You've got Japan under pressure in that regard. The bond auction there was fairly awful. We'll talk more about that in just a moment. Combined with that, we're on intervention watch in China. The question for European markets is, of course, how bad is it in China? What are you more fearful of? Just step back for a moment. What are you
46 could have taken the long
more
again
fearful
at
of?
the
US
WMA.
Federal Reserve or of a major
Hmm.
implosion in China? That is what you must ask yourself this morning. Now, there's an additional line coming from the Norges Bank. They see rates raised further in September. They are not done raising rates. Let's just check in on euro stocking as euro krona, and this is what we've got for you in terms of the FX reaction. You know, let's just check in across the assets here. As I say, they're far from done. That is the red headline from you from Norges Bank. There will be more to come. When it comes to this story in the bond markets, what you have really here is, the Fed, further tightening will come. Yes, they were unanimous, but there were two people who felt that maybe they should hit the pause for the moment. Let's switch back to the euro krona. As you can see, there is a pretty important reaction there, which is a strengthening in the krona, a drop in the euro. This is on the guidance. The Northern Bank government has raised rates to 4%, which is a much is what you really want to keep an eye on. Because, of course, not all central banks are built of the same timber, so to speak. They see raised further in September. That is your red headline. Let's have a quick check.
What is this? Oh, this profit must be better than profit chart. His profit must be greater than profit trigger. Okay, so let me try to. So that okay, we're doing
Bloomberg has learned that the Chinese shadow banking giant is planning a restructuring in its debt. They have hired KPMG to conduct an audit of its balance sheet. The
box.
consensus that China
Or is this box?
damaged
Box.
and stimulus is
likely to be large enough to turn the situation around. Nika Gupta is my guest, Director of Macro Research at Wisdom Tree.
We
Over
very
you,
bullish today.
Faith, Ms. Gupta, how are you doing? So you lack confidence in China, and we're seeing record selling on the Connect. I mean, are you completely devoid of China, Anika? How do you look at the specter of intervention and stimulus right now? Good morning.
Very good morning, Mohammed. So, I think we're in a period of a long, slow grind for the Chinese economy. Yes, we're likely to see piecemeal stimulus, take place on the back of the weakening of economic data. But our view is that's always going to fall short of the amount of stimulus they need. And it's very difficult for China
62.
at the same time because the currency is weakening. We've seen the renminbi fall, and that's a sign of the economy not faring as well as market investors expected at the start of the year. So that's another cause of concern, even though they have enough room to stimulate because inflation is extremely low, bordering on the line of deflation. Yet the fact that the currency remains weak will, warrant them having to intervene in the markets, and hence they're caught between, balancing the economy as opposed to managing currency risk with the currency falling even further.
Well, here's the debate, isn't it, on the currency side? The currency is supposed to act as that release valve. In theory, that's what it did in the UK when we imploded in the UK in the latter part of last autumn. Here we are, the currency's under pressure. I've got the PBOC. We've got a spectacular jump, 918 basis points of a harder fixing, a stronger fixing from the PBOC. I mean, this is virulent intervention and sending a message. Why do you think, is it because of the speed of the change in the currency that has unseated them or nerved them? Because surely in a deflationary environment or the specter of deflation, they would welcome a lower currency.
You're absolutely right. Given the fact that they are a strong export-based economy, a weaker currency should benefit. It should benefit the Chinese economy. But up to a certain point, it's reached a point where it's actually to the detriment of the economy, and it's actually reflecting.
It's nice because as we start to move up, we start to print the trailing stop at the bottom.
I see that, yeah. But if we just started, is there any way we can print that trailing stop when it's down here? Just kidding.
Our 15-year high.
Ay, ay, ay.
Time about 15 years ago, you may well recall, we had a few problems with some clients, and some
But yeah, I
level
see it.
issues like Lehman's, etc., Fannie Mae, Freddie Mac, the list could go on. So yields are back at levels that we haven't seen
I'm out of
for
the
15
trade.
years globally.
So would this be the top of the box for like 10 points?
And every single asset manager to step in now.
Don't know, but the rejection was very nice level. As we saw, we tested the VWAP and the top of the Frankfurt, and we gone up from the top of the Frankfurt.
Mm-hmm.
So, the flows are where the investors' view really lies. The flows are telling us that investors are essentially pricing in, they're embracing duration, investors are positioned for recession, an inflation crash, and Fed cuts.
Okay, I'm in short at 64.25. It's a scalp trade for now. First TP done.
Rates to remain higher for longer. So we don't expect to see Fed rate cuts until the end of
Okay.
2024. And the reason for that is we're facing a much more resilient US economy, and hence, even if you look at the recent data of this week, be it retail sales, be it the Atlanta GDP tracker, those numbers are a much stronger US economy.
I love what you say. There is no alternative. I mean, we murdered that phrase last year, didn't we? We've murdered that a few times. There is no alternative to equities.
The stop loss was very small on this because it's at 70,
Does it get harder,
only 6
Anika,
points.
to stay with the TINA? I know we've come to the lows in equities, but like S&P's given back nearly 5% this month. Nasdaq's down a couple of percent, nearly 5% over 10 days. Looking at bonds to equities, is
Oh
Tina,
my God.
in the emergency room?
So looking at bonds to equities, clearly equity risk premiums have come off. The correction that we've seen, we've been calling for a correction in the markets for a while, and it's a healthy correction. Think about it. For the first 6 months, no one has really had an opportunity to get into the markets because it's been a straight run up. So we are seeing this correction. It's a healthy correction. I think it's inevitable. We're also in the period of August when trading is relatively thin. But I think from the perspective of what bond yields are telling us, they're telling us that that narrative of aggressive rate cuts, inflation falling flat, doesn't exist anymore. We're likely to see bond yields trading higher for longer. We don't see it hit, if we don't see the 10-year 4.7% mark, as we expect, monetary policy does work with lags. So while the US economy is extremely
Okay,
strong at this
so
point, we could face a slowdown along,
I
along the
wouldn't
line.
short here anymore. It's like my first TP was done, which secured all of my contracts because I opened 6 contracts and 4 of them
mhm.
it's closed. Still got the 6 point stop loss, but all trade is paid off. So it's very risky.
Nika, thank you very much. Great coverage this morning. Nika Gupta, the Director of Macroeconomic Research over at
Only one thing which is just telling me to try to short it is the dollar try to stay above the 200, but it's
Mhm.
going lower and lower. But the VIX is below 200, and that's not good.
Reserve Bank. A deep dive into monetary policy.
And this will be my last trade for the morning session.
Yeah, I don't. I mean, we have that arrow, but at 68, 68, 50. But that's already.
The conversation that matter, the insights that you need, it is the pulse on Mediterranean Dubai. Well, the frontrunner for Argentina's presidential race, Javier Milei, is pledging to close the nation's central bank, but
Mhm.
says he'd make every effort to avoid a default on debt. In an exclusive interview, he told Bloomberg that his plans include making the US dollar
One bare
the
reversal line
official
formed. What,
currency of
what time frame?
Argentina.
Where is it?
I think there's a previous discussion about dollarization. Actually, strictly speaking, it's to get rid of the
I don't
central bank.
see it.
Dollarization is an instrumental issue at the end of the day. There are four argumentative axes. One has to do with a moral issue, which is that stealing is wrong, and seigniorage is nothing more or less than a swindle by politicians against good people. Therefore, let's say if we consider that stealing is wrong, one of the greatest thieves in the history of mankind is the central bank. The second point has to do with a technical issue because in the Argentine case, it is more evident when a product has no demand, its price is zero. So, if the local currency has no demand, then its price should be zero. The equilibrium real balances are zero. Whatever amount of money a central bank wishes to impose, the counterpart is that the price level is infinite. Demand and its price should be zero. Equilibrium real balances are zero. Whatever amount of money a central bank wants to impose, the flip side is that the price level has infinity.
And what do you do with the central bank? Would you close it? At one point, you made the joke that you were going to set it on fire.
Well, what you do with the building is a problem of what you decide to do with it. It's a figure, it's a metaphor. What I'm saying is that the institution doesn't exist anymore. I am saying that in the transition, until you can transform the banking system into a free banking system, you will have to fulfill the function of regulating the banks.
Yeah,
The
I'm
superintendent
done.
of financial institutions will continue to operate
I
until a
don't
free
see
banking system
the.
can be set up.
Okay,
Bad idea.
1964.
You are president in 6 months, 10 months, 1 year. All the bills in circulation in Argentina would be dollars.
Okay, well, I guess that's.
All dollars,
I'll just
yes.
try demo because I'm gonna blow the account.
And you were 600 in profit. You should close it then. I told you, close the money in the profit. So Texas, you need to just.
As we just said, talking about the country's central bank.
No, I wasn't in profit. I was in $600 loss. That's why I only needed $600.
Okay.
I only needed $600 loss to recoup the $600, and that was it. That's why. Oh no, I'm sorry. I needed 1,000 to recoup what I lost,
Okay.
and I only needed 1,000. What 600 left to recoup the 300. I had 300 in profit, but I never got it. I never took it.
No problem. I'm done for today. As I mentioned,
Okay.
I don't want to be tempted of taking any more trades, so
Okay. No, of course.
we'll be closing for now. And I'm not in tomorrow, so see you next week.
Okay. Okay. Bye.
Bye.